Watch, which you can find only on Worldwide Exchange.
Merrill Lynch may be the latest U.S. company to get a big investment from a sovereign wealth fund. There are reports it could receive a $5 billion capital infusion from Singapore state investment firm Temasek. We're joined now by Philip Lawler, Chief Portfolio Strategist at Nomura, and Nico Harachi. He is CEO of N1 Asset Management. Now, Nico, if I can put the first question to you, I mean, why Merrill Lynch? Why not Bear Stearns, for example?
Well, I think it's a question of who was needing the money right now. And I think Merrill Lynch were coming out, having a write-down, and who were there to put in the money. So I think they found a strategical investor who were willing to save Merrill Lynch at this point of time. But I think this is a very, very interesting scenario that we are having, and I think this will continue in 2008. I think that we're going to see more and more merger and acquisitions. I'm going to see much more money coming in, as you said, from the sovereign wealth funds, but also maybe from other Asian strategical investors helping Western financial institutions.
Philip, Brian Shackman here in the U.S. These sovereign wealth fund investments, a lot of times not getting any power on the board of directors. Seems to be around 4 or 5% in terms of ownership. Will we get to the point where they try to do a full takeover of an institution?
It's not inconceivable. I think there are then going to be some what I call political considerations in the U.S. Congress is already starting to intimate it's just got these on a watch list. They're happy with the stakes, the size of stakes being taken. I think if we were to see much bigger strategic stakes, possibly the political antennae really start to get to work. So we'll have to watch that.
Meanwhile, just how much further do you think we've got to go? How closely are you watching, Philip, the insurers? Because we saw yesterday the report from MBIA. If insurers actually get downgraded, there are those who calculate that just a single notch, you'd wipe another 60 billion off the value of bonds, CDOs and structured investments. Is the big fear now here actually that the write-downs we've seen are we're not even halfway through if the insurers get downgraded?
I think you've hit the issue on the head here. We're shifting from considerations about liquidity with the credit crunch to solvency. And the reality is the share impact in terms of capital impairment is not fully in the markets, in my view. What we've got to see is the sentiment shift has gone from underestimation. At some stage early next year, we're going to go to overestimation in terms of the full impact, but we're not fully there in terms of the full estimation. So I think your point is well taken. We've got more to come.
Nico, if I can put this next question to you, there's been a liquidity problem, particularly in the OECD markets. We've seen a number of central banks injecting funds, if you like. What's the outlook like in terms of liquidity for next year?
Well, I like that question a lot, and I think that when we look at the liquidity, I think we have to view it from two different scenarios. I think we should have to look at it from the point of view of the Western economies, the US and the Eurozone, where we are seeing that they have actually in 2006 and 2007, we have seen this been an easy money liquidity-driven asset bubble. And we've seen investors getting access to liquidity at such low rates that we haven't seen before. However, in the past 2 to 3 months, we've seen this shifting, and in fact, we're seeing the borrowing costs at a 7-year high. So we don't think that the liquidity in 2008 is going to come in as easy as it has in the past. And if we look at the ECB capital injection of 350 billion, I think this was seen from many investors as a positive sign in order to calm the market. We, as a matter of fact, don't see this as a positive. I think that the policymakers are having inside views and are very scared of what is to come in 2008. And now shifting to the second scenario, I think we're going to see a lot of liquidity in Asia, especially with the new QDII from China, where they're increasing the quota. So I think they're coming out and trying to make the valuations of the Hong Kong stock market sustainable.
All right, Nico, both of you gentlemen, Nico and Philip, stick around for a little bit. We're going to get into some more specific strategy after the break. So Nico Harachi and Philip Lawler will stay with us. Also coming up, the ultimate present hunt, Nintendo's Wii game console. Of course, it's a hugely hot gift to get if you can actually get it. Well, I went on a quest, a huge quest, a mission throughout New York City to find it. I'll tell you what I found in the next hour.
Well, we have very elaborate systems in place to prevent oil pollution, and we make sure that these systems are very rigorous. But more important actually than systems or hardware like the ships themselves is the people that you have operating the ships. And so our primary focus is really on having the best people and ensuring that they have an environment where they can perform to very high levels and prevent pollution. Of course, there's a whole other aspect of pollution, which is air emissions. And this is an area of growing concern for all industries. What people sometimes forget is that shipping is responsible for carrying 90% of world trade and is by far the most carbon efficient form of transportation. We're not complacent, we can't be complacent about the pollution that we're causing, and we have some active strategies to manage that. But we also have to put it in the context of what shipping is doing to keep the world running.
I play to win, but I couldn't have done it without a great team behind me. That's why U21 Global is my choice for graduate learning. The courses are engaging, inspiring, and world-class. And being online, it's flexible enough for me to fit in with my playing schedule, freeing me to learn whenever, wherever in the world I may be. U21 Global, it's all I need to truly succeed.
U21 Global, graduate school for global leaders.
Your CNBC mobile experience is now complete with a dedicated website designed for your mobile at asia.cnbc.com. CNBC Prime and SMS alerts keeping you up to date with the latest financial information, complementing our 24-hour live channel streaming and video on demand. Keep your competitive edge with CNBC Mobile. Access CNBC anytime, anywhere. Brought to you in association with the following operators.
Tonight, it's the return of two high-tech high flyers. Is the second time around the charm for investors? Squawk Box, where business turns first. Tonight at 8. She's a financial advisor, and she's not afraid to tell it as it is.
You are making a bad mistake here.
Susie Orman will change the way you feel, think, and act about your money. The Susie Orman Show. Weekends at these times on CNBC.
You're watching Worldwide Exchange. These are the top stories. In Asia, markets wrap up the week on a high note with financials and technology shares leading the way up. In Europe, more write-downs. This time, French bank Credit Agricole declares $3.6 billion worth. In the U.S., Merrill Lynch's SOS signal may be answered in the form of a $5 billion investment from Singapore's Temasek.
Let's return directly to our strategy panel right now. Philip Lawler, Chief Portfolio Strategist at Nomura, and Nico Hirachi, CEO of N1 Asset Management. Philip, I want to start with you. We talked about Merrill. We had the Bear Stearns losses, the Morgan Stanley losses. First quarter of 08, we'll probably get some more write-downs, maybe into the second. When in 08 can we jump back into this sector full force?
I think the absolute key thing with the financials is to examine really what happened when we had a similar consideration of this capital damage. The capital impairment was really the 89-91 saving and loan crisis for the US banks. And then one of the key turning points there was when the market perceived that the Fed were genuinely trying to engineer what we call a bull steepening of the yield curve. Now, the yield curve in the US has actually started to steepen, but there's no conviction the Fed are really targeting the yield curve. I think come most probably the second quarter of next year, we're going to get that greater conviction coming in, and I think that'll be a very important catalyst for the sector. You're not going to see tangible positives in terms of improvement to capital, but the market will discount that. The market will be early. So I'm watching the yield curve very closely at this moment.
Okay, we'll keep our eyes on that. Meanwhile, Niku, I wonder what the outlook is for your view for emerging markets next year. We had a guest on yesterday, Michael Hughes, who said actually he thought the growth inflation scenario is far worse for emerging markets than established markets, on the basis that if you get food inflation next year, that has a far bigger impact on domestic consumers and on their wage claims. What do you make of that?
Well, I agree with you on that, and I do think that we are seeing inflation coming up in the emerging markets such as China and India, and but we're also seeing the Chinese bank coming out and increasing interest rates. But having said that, we think that the outlook for the emerging markets of 2008 is going to be much more riskier than we have seen in 2007. We have seen the corrections in the past few weeks, and we have seen valuations coming down a little bit. However, we still think that the valuations are high. We still think that corporate earnings has to come out with 30 to 40% of more profit in 2008, and we don't think that's sustainable. So at this point of view, if you want to look at some Asian markets where we think there could be some great returns, we think the South Korean market, we like that the new president was elected. I think he's going to increase consumer confidence in the market, and we also going to think that it could attract foreign investors to coming back. And foreign investors for the South Korean market is an important step, because since 2005 we've seen foreign ownership coming down from 45% to less than 33%. So we think that maybe South Korea could be good in terms of risk and return numbers.
Philip, if I can put this question to you, you're calling for emerging markets to underperform next year as well. Is it very much for the same reasons that Niku brought up, overvaluations and inflation to be the key risks for the EMs?
Yeah, very much so. I think, there are apparent risks really building in the system there, and it's all about expectations. And also just adding to that, this notion of decoupling, we've got to be very clear with differentiation between decoupling of markets or decoupling of economies. And the point about the economic decoupling is it's not been tested yet. It's not been stress tested, and we've really got to see that. If the US consumer does have a harder landing than really consensus is currently factoring in, disposable income in the US falls to about 1.5%, we really will have to see just how decoupled the economies are. There's no evidence the markets are decoupled. They just exhibited higher beta rather than actual decoupling. So I think the jury's very much out on the emerging markets, and one to be put a sufficiently big risk parameter around them at the moment.
Niku, we had a bit of a tech-led rally yesterday with Oracle transferring into some momentum with research in motion. The tech sector has been up and down. We thought it was kind of a safe play, a defensive play a few months ago. Then it sort of swooned, and now it's back up. Is this a sustainable rally for 08 in the tech sector?
Well, the tech sector, I mean, it's always a question of also if you look at various companies coming out with new technology. Obviously, if you have some companies coming out with new technology which is in demand, then obviously this company is going to do good. I think if you look at the overall tech sector, I still think that we're seeing valuations too high, and I also see that the technology sector is still also very, very much consumer related. So if we're going to see the expected slowdown as we see it, I wouldn't favor the technology sector as such.
Okay, gentlemen, we're going to leave it there. Thank you very much indeed for that. Niku Hirachi, CEO of N1 Asset Management, and also joining us, Philip Lawler, Chief Portfolio Strategist at Nomura. Philip, thank you. Some of the other stories we're following. Philips Electronics is buying US healthcare group Respironics for $5.1 billion. The Dutch company is paying $66 a share. Respironics develops products for sleep therapy and respiratory diseases. Philips says the acquisition will immediately boost sales growth and earnings when it closes in the first quarter of 2008. The Respironics board is recommending that its shareholders accept the offer.
Australia's Qantas Airways has ordered 31 Boeing next-generation 737 single-aisle planes in a deal possibly worth about $2.3 billion based on current list prices. The new order brings the number of 737 sold this year to 713, making it Boeing's most popular plane by far. The company is neck and neck with European rival Airbus in the race for orders this year. The final tally for both companies should be made public